The Kenyan banking industry is almost reaching saturation level, forcing local banks to start looking for business beyond the Kenyan borders. National Bank of Kenya is set to become the latest bank to join the queue of banks eyeing a piece of the regional market. During an investor briefing this morning, the bank's managing director, Munir Ahmed, said the expansion will be funded by funds raised through a cash call which is slated to take place this year.
We're increasing our capital by way of a rights issue. Risk management, a journey, still strengthening it more by now using tools and systems, and we'll continue to enhance our brand.
The bank, which is partially owned by the state, is not yet out of the murky waters after it announced a relatively low pre-tax profit of 1.8 billion shillings for the year ending December 2013. The bank saw its operational cost rise to 6 billion, which is an 11% increase in comparison to the same period last year.
Most important, we will rationalize our cost base so that we bring that cost-income ratio to the desired 50% within the next 2 years. And out of that, one of the things we'll do is offer voluntary early retirement for some of our staff so that we can have the right staff complement to run the bank.
The bank attributes the increase on restructuring and expansion of branches, as well as investment in technology that the bank has undertaken in the last 2 years. The managing director told investors that it plans to start a staff rationalization program which will target non-core staff. Loans and advances have increased by 61% to settle at 48 billion, while total assets jumped to 93 billion Kenya shillings. Munir attributes this growth to increase in lending and the relatively low interest rates in 2013, unlike high rates in the recent years that saw bonds prices go down.
But regardless, better late than never. I think now National Bank is on a very rapid growth trajectory.
The bank targets to control 5% of the banking business in Kenya to help attain a top-tier status by 2017. Shareholders are set to get a final dividends payout of 33 cents for every ordinary share and preference share. Regina Manyara, Business Defined.